What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a very bullish day in the stock market with the NASDAQ 100 leading the way as we are preparing to go into earnings season. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today we did see SPY going up 0.3% and we did close over that next resistance level at 447. Now 447 will be a very strong resistance level, so the fact that we just closed 19 cents over that level is not a very convincing close, and I do think you really need to see two closes above that level. We have plenty of gaps below, so there's plenty of opportunity for pullbacks with strong support for the bulls. So remember, the bulls are taking back control of this market, and we are getting to the point where the bulls have full control. There is tons of support below the price action as we start building back up a bullish trend. And we're definitely seeing the price action very impulsive, which tells us we're going back on the bull. I did macro level analysis showing the weekly charts on why we're still in a bull market. So if you haven't seen my macro analysis from the weekend, go check that video out. But the summary of the video is that we're still in a very strong bull market, even though we do have a lot of bearish momentum that we are reversing on the daily chart. You can see the bulls are taking the elevator up ever since we had that strong bounce off of that support right around 433. So as the bulls build back up a bull trend, continue to watch the price action because the trend is always going to be a lagging indicator. That's why we use the higher degree on the weekly chart to see we're still in a strong bull market, and that's why we continue to stay on the side of the bulls. Now to the downside, we still have support at 444 and the gap close right around 442.7. Below that, we have strong support at 441, and the critical support level is now the 50 EMA, which is just above 439, and it's basically going to be right around 440 as soon as tomorrow. So below 440, we're starting to break down below critical support and increases the probability we're going to close the gap at 436. I don't think these gaps will fill because on the weekly chart, we have much stronger support above this gap. So don't expect that gap at 436 to get filled, but we could easily fill the gap right around 442.7. So on a break below 441, look for that gap fill. Otherwise, we're going to continue to build bull flags and continue to march higher in this bull market. We have a lot of earnings coming up and the big tech is leading the way as you saw with the QQQ's price action today. So watch upside resistance at 450 if we get another decisive break above 447. And above that, we have the previous resistance at 453 and then a brand new all-time high at 456. You can also see the Bollinger Bands are starting to expand, which is going to allow that price action to continue to climb higher. Jumping over to the NASDAQ 100 QQQs, remember we were looking for this potential ABC correction, and now we're looking for the possibility that we're going back into a bull cycle to brand new all-time highs. It looks like that's exactly what we're getting, and we see the price action on the QQQs getting very close to that previous daily high, just above 373. So we see the QQQs looking very impulsive and very bullish, bouncing off of that support level at 357, which we covered in great detail on the hourly chart. And we did confirm the bullish breakout with the close back above 365. And now we're above the 50 EMA for 3 days in a row with very bullish price action. So the trend is going to follow the price action. So we should start rebuilding the bullish trend as long as the price action can get that daily higher close above 373.4. So look for that breakout, and above that we have resistance at 378, 381, and the next all-time high at 388. The critical support level is still down here at 365, and if the QQQs break below 365, look for that gap close just above 360. Remember, I don't think these gaps have to get filled because on the weekly chart, we do have strong support above these gap fill levels, so don't pay too much attention to those gaps. They're very likely going to get filled, but they're not likely going to get filled until the next stock market correction. On the Dow Jones, we were down 0.1% today, so relatively flat on the day, and we do see the Dow Jones holding above that support level at 351 with a gap below. So again, very impulsive price action with price action back above the 50 EMA for 3 days in a row. So the Dow Jones has strong support at 351, the gap close at 349, and our strong support level at 348, and the 50 EMA is basically going to be right at that level as well. So as long as the Dow Jones is above 358, we see higher highs and higher lows, and we're going back into this bull cycle. So watch those support levels, and your resistance on the Dow Jones will be at 355, the previous all-time high at 356, and a brand new all-time high right around 360. In the Russell 2000, we were pretty flat on the day, only going down 0.06%, and we see the Russell 2000 still struggling to break out of our resistance trend line. We had intraday price action above the breakout, but all closing prices have been within the resistance trend line, so the breakout level will be a close above 226. However, the stronger breakout level confirmation will be a close above 227, so watch that level as well. and above that we still have resistance at 230 and 233. To the downside, we have support at 223.6 and the gap close at 222.7, and below that we have our most critical support right around the 50 EMA at 222. Below the 50 EMA, we could come back down to the strong support level at 219, and below 219 we're breaking down and starting to see a lot more bearish price action, and we could see a retest of support at 215. Right now, looking at the trend on the Russell 2000, it's looking very bullish, and if that 20 simple moving average crosses back above the 50 EMA, the Russell 2000 will have the full bull trend. So don't rule out the small caps just yet, because even though they are underperforming, they could see a very impulsive breakout bullish rally coming out of a close above 227. On the Arkk ETF, we were up over 1% today, closing back above the 50 EMA, so I do now think we invalidated that price target down there at 102. Arkk is looking a lot more bullish as long as it can stay above 116, which is the support level at the 50 EMA. Don't forget, we still do have a gap close right around 113.5, so we could see a retest of support at that gap fill or the 20 simple moving average. If we see Arkk breaking back below 110, we're very likely going much lower, but as long as Arkk is sitting above our 20 simple moving average at 113, I think you can start getting a lot more bullish in this ETF. We're very likely going to see a strong bullish rally in the growth sector for Q4, so Arkk should do relatively well, all things considered. To the upside, look for resistance at 120, 123, and 126. On the VIX, we were pretty flat on the day, and we see the VIX closing below our support trend line for the second day in a row, and we continue to see the VIX getting crushed, which is a bullish price action development. If the VIX starts heading back down towards 14, we should see brand new all-time highs in the stock market. If the VIX starts spiking back above 20, we could go into a deeper stock market correction, but with the current market conditions, I just don't see that happening. But you always need to keep all options open, so watch for the VIX if it does spike above 20 to possibly lead to more downside in the stock market. We can see bearish trending building up, and we definitely have bearish price action, so as long as the VIX is heading lower, look for another continuation of the bull cycle in the rest of the stock market. On Bitcoin, we're currently flat, only down 0.08%, and we continue to see Bitcoin with bullish price action and the full bull trend. Look for that breakout level, which is our price target at 63,500, because above that, we're going to brand new all-time highs, and I do have price targets at 67,000 and 75,000. Remember, Bitcoin is bullish, and you never know how high it can go, so these are price targets. Even though we could go higher, watch those levels, because any of those levels could lead to another pullback. To the downside, we have support at 58,000, the 20 simple moving average at 54,000, and our strong support levels at 52,000 and 51,000. Our 50 EMA is now at that 51,000 support level, so as long as Bitcoin is staying with bullish price action and bullish trending, you want to hold on for the wild ride. On Amazon stock, we were up 1.11% today, and we did get the bullish price action breakout a couple of days ago with Amazon blasting right through that resistance at 33.11. Remember, I told you if Amazon is above 33.11, you can go back on the bull, and we also saw Amazon breaking out back above the 50 EMA, which is another bullish price action development. Today, we see Amazon closing the gap at 34.52, and we have 2 days in a row of the price action back above all the moving averages, as we see Amazon looking like it put in a potential bottom and is starting to go back on the bull. So resistance for Amazon is still this gap close resistance level right around 34.52, and above that you have resistance at 3,500, 35.52, and the next gap close at 35.80. As long as Amazon is staying above the 50 EMA at 33.60, you need to stay bullish on Amazon, because it could be going into another bull cycle to close that gap above. If you see Amazon breaking back below the 50 EMA, but it's still staying above support at 33.11, you can still say bullish, but that's your line in the sand that we have to stay above to see Amazon remaining bullish. We're seeing breakout on increasing volume, so it does look like the real deal breakout for the bulls in Amazon stock. On Tesla stock, we're still seeing very bullish price action, going up 3.21% and going up on increasing volume as we get ready to go into earnings season. We see Tesla gapped up and closed above that next price target at 858. So our next price target now is the previous all-time high of closing prices at 881. I don't think Tesla is just going to go parabolic and blast out and go to a brand new all-time high. So I am expecting to see very strong resistance at 881. And with Tesla looking so strong going into earnings, it's more than likely going to sell the news, even if it's a blowout earnings report. So at this point, with 2 gaps below and Tesla going parabolic before earnings, I don't think you want to be overly bullish at these levels. Look for the gap close below at 845, and below that we have another gap close right around 821. At this point, I would look for Tesla to come back down to the mean, which is our 20 simple moving average. So I'm expecting to see Tesla at least come back down to about $800 with the current market conditions. However, you can never write off bullish price action, and we have to acknowledge we're going up on increasing volume. So don't rule out the possibility that Tesla doesn't actually come all the way back down to 800. So watch the support levels at 858, the gap close at 843, the support level at 826, and the gap close at 821. And if we come all the way down through those support levels, then you're looking for the retest of support at 800. So play it day by day and watch the support levels as the price action comes down. Otherwise, we're more than likely just going to see a blow off top and Tesla's going even more parabolic, and the sell-off will come later. On Apple stock, we were up 1.18% today, with Apple breaking out and closing back above the 50 EMA, which is a bullish breakout with Apple back above 145. We also did get this confirmed double bottom breakout, so that does mean Apple is very likely going back up to 150. So 150 will be the price target in the short term, and obviously above that we're getting even more bullish, and we could see Apple retesting the previous all-time high at 157. Look for downside support at 145 and our 20 simple moving average at 143, and we still do have support at 142 and 139, and below 139 we're closing the gap at 137. At this point, with the confirmed double bottom, don't even look at the gap below at 137 unless we get a price action breakdown back below 142. Also, don't forget that Apple is a market moving stock, so if it has a confirmed price target at 150, it's very likely the rest of the stock market is still not done going higher. On the financial sector, we were flat on the day, but we still do have full bull price action and a full bull trend. On the industrials, we were flat on the day, but we still see price action above all the moving averages, and we're definitely starting to see a lot of momentum shifting back to the bulls with all the moving averages with a positive slope. On the healthcare sector, we were down 0.68% today, and we still see bearish trending and bearish price action, so it doesn't look like the healthcare sector has completely finished correcting just yet. If the price action can get back above the 50 EMA, then possibly the correction's over, and we could see the healthcare sector looking bullish yet again. The energy sector was flat on the day, basically going nowhere, but we still do have full bull price action with a very strong full bull trend in the energy sector. So jumping back over to the S&P 500, you can definitely see with the price action that the bulls are taking the elevator up, and there's nothing in this market that tells us we can't continue to go higher. The macro level trend is still bullish, and on the daily chart, we're starting to see a lot of bullish developments, and we are seeing a lot of bullish price action in all of the sectors across the board. The weakest sector is by far the healthcare sector, but that could also be turning a corner soon. So don't rule out the possibility that we're going to brand new all-time highs and that the bulls want to get there in a hurry. The price action has been very impulsive, and we're blasting through resistance level after resistance level, and we are going into earnings season, which is typically a very optimistic time. So as long as earnings are strong and we see companies continue to beat and raise guidance, we're very likely going to see this bull market continuing, which is exactly what you expect to see in a secular bull market. So we're in a bull market until we're not, and don't fight the trend. We're still in a very strong bull market, so you still want to trade with the direction of the trend, and you still want to try to buy off support and sell at resistance. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and with the current market conditions, I think now is the best time to be a BANC member. I'm currently running a 50% off promotion code for your first month, so now is the best time to try out BANC Trade Alerts. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you want to become a member of the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.